All right, welcome back to the program. David Ado, a senior analyst at Meristem Securities, is joining me right now. Hello, David. Can I see your face? Oh, okay. David, I can see your face and your smiling face. You know what you just reminded me? Two Faces or two Babas song Blood on the Dance Floor. I want to see a happy face. I want to see a smiley. Yeah. The land is full of jolly. I'm not a good singer, you know, but come take me to the blood on the dance floor, blood on the dance floor. So let's start. Blood, so much blood on the Nigerian stocks now. What's happening? Just like Baba said, blood on the dance floor, but right now it's blood in the markets.
Well, thank you for having me, Nancy. It's always a pleasure to be here with you. Looking at what is going on in the markets, well, it's something that we had already expected to see, at the beginning of the year, because if you look at what has been driving the market so far, that this has largely been because of the liquidity in the system, where there's excess liquidity, and also when you look at what is going on in the fixed income space, where yields, when we started the year, yields were at historic lows, around 1%, thereabouts. Um, so the relationship has always been that when yields eventually start rising in the fixed income space, we will start to see some sell-offs in the equity space, as investors begin to look for safer havens for their funds, and that is gradually what we're seeing right now. The CBN, we had earlier expected that yes, the rates will rise, but we didn't expect that it will rise, it will start rising as quickly as this. And the CBN, in an OMO auction earlier, in the month, the CBN started taking, yields at that market back up to over 10% at the 1 year end. And that was more or less like a signal to the markets that probably, we are going to start to see this rates reversal happen quicker than expected. And subsequently, at the treasury bills auctions and also at the bond auctions, we started seeing, those rates start to climb up gradually. And probably, this, confirms that signal that, probably rates are going to start rising from here on out. And we've started to see that expectation gradually filter into the equities market, that some investors are now selling off their holdings to partake in what is going on in the fixed income space. But even at this moment, it's not like there is complete blood everywhere. It's just on some few names, largely some of the small cap stocks. Some of the larger cap stocks are still relatively solid. They've not really moved so much from where they are. Take, for example, your Boa Cement, your Airtel Africa, I think even MTN, they've not really shared so much. But, when you look at, I think it's just a couple of banking names that have, really shared markets. They've really shared, share price. But aside that, we are still, it's still a dicey situation, and something that we'll still watch closely, watch the development closely to see how this, how that's, how the events in the fixed income space, how they progress from here.
Okay, David, out of all these market segments, the stock market, the money market, the treasury bills market, the local bond markets, the FGA and Euro bond market, the currency market, which other market haven't I called? Which of those segments are analysts such as you watching very closely and trying to see if there will be an upturn of somewhat, whatever margin it is or whatever direction it will go?
Yeah, well, literally watching all the markets. I think at this point it's very crucial to keep an eye on what is going on in all segments of the market, both the primary markets and also the secondary markets. We watch the equities markets. We watch closely, the primary fixed income markets. That is, the T-bills auctions, the primary T-bills auctions, the secondary money markets. We watch, the primary bond auctions and also the secondary bonds market as well. So we watch all these spaces closely to see what is going on. Even the OMO markets as well. is something that I mean, it's very, very important right now to keep an eye on that space to see what the CBN is trying to achieve in that OMO market. And also look at the parallel markets as well, the INE exchange, the INE market. So we keep a close watch on all those markets because each of them have different, information that they convey to the broader, investing space. So it's always good to have an understanding of what the new developments are to get a full picture of what is going on in the respect.
Okay, David, let's talk about the OMO market a bit and explain to my viewers what the OMO market, because I mentioned OMO actually earlier when I was doing my analysis, that the OMO auction last week, the Central Bank of Nigeria offered and sold 180 billion naira worth of notes. Explain to my viewers what OMO means. Because sometimes they may begin to think, is it that popular detergents that we used to use those days? I don't know if it's still existing. Yeah, I just needed to ask that question so so that they will understand. Some of these terminologies, a lot of people will just get left by the wayside.
Yes. So the OMO market is a segment of the money market where the CBN, as a central bank, and the commercial banks largely play in. So it is that segment of the market where the bank is, or one of the central banks, arsenal that they use to conduct monetary policy. So essentially, what happens in that space is, the CBN uses the market, or not just the CBN, essentially, even in other economies, the central bank, if the central bank wants to influence the volume of liquidity available in the system, one of the things that they can use is to sell, OMO instruments, or redeem OMO instruments for cash. So when they are looking at reducing the amount of money in the system, so what they do is that they sell OMO instruments, and the banks have no choice but to partake in those sales. So they sell the OMO instruments and they deduct cash balances from the banks. So essentially, what they want to do is to reduce the volume of liquidity in the system, and the inverse is the case when they want to increase the amount of money in the system. So they begin to redeem OMO bills, and then once they redeem the OMO bills, the banks receive cash, and then they're able to use that to create loans, or conduct their daily operations, so that you have a lot more liquidity in the system. So that's one of the tools in the CBNs, or in the central banks arsenal, that they use for conducting monetary policy. But in Nigeria here, what we have is that it not only serves that purpose for conducting monetary policy, but also it's an alternative, or it's one of the asset classes that institutional investors also invest in. And before now, we used to have both HNIs, institutional, that's domestic corporates, partake in that OMO market as well. So where the CBN sells OMO instruments, and they were previously very high yielding, particularly that period when we got out of the 2016 recession. They were previously very high yielding, about 20% at some point. So they formed that asset class. But eventually, what we had was that the CBN decided to shut off domestic corporates, HNIs, from that market, and made it available to just foreign investors and the commercial banks. So what we now have is sort of like a segregated system, sort of, where the CBN can use the OMO market for its monetary policy objectives. Take, for example, right now what they are doing is, if you look at what is going on in that space right now, you look at where yields are on the 1-year instruments, you see them above 10%. But if you look conversely at an equivalent, which is at the NT bills market, you look at a 1-year treasury bills. Where's the yield now? I think it's around 4% or 5%. I'm not very sure about the last auction, but that is where there is that disparity between those markets. And the CBN is able to use the normal market exclusively to attract, foreign portfolio investors who demand, higher returns for coming to the economy right now. So what you see is that the space has become, sort of differentiated. Almost largely for banks and foreign investors, while the NTBs, the NTBs market is largely for, every other person. So the banks, the foreign investors, domestic corporates, all and sundry can participate in the NTBs market.
That's the
So that is,
Nigerian Treasury bills.
yes,
We
the
must
Nigerian
also say, yes, we must also say that OMO means open market operations.
open market operations,
Yes,
yes.
so that people understand what we're saying. All right, let's quickly shift to equities. Let me take a look at the GDP numbers, the recently released GDP numbers by the MBS, 0.11% growth for the fourth quarter of 2020. Do you see a shift in the portfolios due to the recently released GDP numbers?
Well, if you're looking at, if you want to use the GDP numbers as a basis for, you know, trying to predict investor performance, I don't think that would be the best bet right now, because for a lot of investors, um, we were largely expecting that, um, the GDP numbers would, I mean, by the end of Q4, we will still be in a recession, and probably, we're coming out of the recession in maybe first quarter, or the second quarter. But if you look at what happened, I mean, if you look at those results, we recorded a growth of, I think, 0.11%. Um, that's eventually reducing the recession from, I think, about 2.3 or thereabouts, to, I think, 1.92%. So, looking solely at those numbers, you still see that the fragility, still remains. Yes, we're out of the recession, but when you look at the broader economy, you still see that there's still a lot of fragility, particularly with that the strength of those numbers. You look at, some of the weakness in the foreign exchange environment and all. So those structural bottlenecks are still there. So the GDP results themselves, I don't think that will impact investor decision as much. Rather, what we should be looking at is what are the developments, in the monetary policy space, what is going on in what is the level of, liquidity that you have in the markets, because those ones are much more likely to shape investor decision in the short term and even over the long term. So, what policy directives are they taking at the moment? The GDP figures are largely, they're largely, trailing numbers, so they are historical numbers, and um, they tell us, what has largely taken gone on in the past versus, where we are right now. So what do you need to do to achieve your portfolio objective right now? So I think those, the one that should be of much more concern, what the policy body language is from both the federal government and also from the central bank. Those would largely, influence investor portfolio decision.
Okay, from your own analysis, what kind of body language do you expect from the monetary policy side, especially as we're expecting that the next MPC meeting comes up in March, perhaps in about 4 weeks' time to now, towards the end of March. What kind of policy do you expect from the MPC at their next meeting, bearing in mind that Nigeria's economy, we actually just limped out of recession. A lot of you did not expect that. I don't know if you were part of the pack that predicted that our economy will still be in a recession by fourth quarter. But what kind of policy direction do you expect from the MPC at their next meeting in March?
So at the last, yes, we were part of the pack because we largely expected that our expectations for 2020 was that we would do, I think, negative 2.37%. But the figures were surprising, and we came out of recession a lot faster than we expected. Um, so what body language would we be expecting from the NPC? Before now, what we've seen, they've largely chosen um, to support economic recovery because if you look largely at what the monetary policy objectives for any central across the world, one of their primary mandates is price stability and you would want to point to inflation for that. But so what we've seen in the past couple of things is that growth
Okay.
supporting boosting
Okay.
supporting boosting.
Okay.
Okay.
David, okay, if you can hear me, go ahead because there was a time that the network
Oh,
froze. Yes.
sorry about that. Can you hear me now? Is it better?
Okay, it's not better. Let's quickly take a
Hello?
break. Okay, can you hear me now?
Yes, I can hear you now.
Okay,
I can
okay,
hear you.
okay, okay. Go ahead and land on your point.
Okay, so what I was saying was that the MPC has largely chosen to focus on supporting economic growth and supporting boosting credit, to the domestic environment, which is something that I don't think they would even stop as of now. Because if you look at those figures, like I mentioned earlier, there's still that significant, fragility that still remains. And one of the things that they will be looking at doing is to ensure that, we build on those Q4 numbers, and by the time Q1 2021 figures are released, we'll be able to at least get back to pre-pandemic levels of growth of I think about 2% or thereabouts. And even when you look at it in the real sense, those 2% levels are not still good enough for us as an economy. So we need even larger numbers or larger growth numbers than that. So what will be the prime focus of them, I think, will still be, supporting credit growth to the economy, supporting, keeping the environment largely easy, as the monetary policy stance will still remain largely easy, so that it will support the real sector growth and all. So I think that's what their body language will still be.
David, still sticking with the GDP numbers, and when it was released last week, a lot of analysts have come up with different, postulations as to why the economy wobbled out of a recession. But perhaps you can also not de-emphasize the fact that government's fiscal interventions as well as monetary interventions, such as the targeted credit facility, loans to households and businesses, the different interventions that we've seen in different sectors, helped the Nigerian economy wobble out of the recession in the last quarter. Where I'm actually going to is, would we rather see investments than transfer of cash to people? Because a lot of economists and a Nobel laureate in economics, Paul Krugman, I've heard Paul Krugman say times to that number that perhaps we need to give, there needs to be investments more than transfer of money to people. What do you think?
I totally agree. Direct transfers to people is just, or direct transfers to the population is largely a short-term fix for these macro shocks that you see. I mean, for example, what we had with COVID. So not just in Nigeria, but if you look at what happened, across all developed economies, there was targeted fiscal policy intervention, even from the monetary policy as well, from the monetary authorities as well. They all implemented some form of interventions in their domestic economy to support, to support their population. A lot of them did, direct transfers. Take, for example, what is going on in the U.S. So you had, trillions trillions of dollars of stimulus that were implemented. Um, those, those direct transfers come at a cost, and that cost is to the public finances, and is also, to is at the cost to, to their, fiscal balances, like I said earlier. So essentially, what you would expect is that those are short-term fixes. Fiscal balances will, largely deteriorate, and you will see that, debt levels will continue to rise. And if you, I mean, we wrote about this also in our outlook report. But if you also look at what is going on, what the IMF is saying about this, yes, these fixes are necessary in the short term to, support the pandemic recovery. But you would expect that eventually over time, you will start to see um, policy normalization, and that will begin to roll back gradually, because if they don't, probably more risks will begin to crystallize. If you dial back to our domestic economy and what we are seeing, you'll see that yes, we also did our own form of intervention, although that was lower than what we saw in other economies. So when you're looking at direct transfers, it is largely a short-term fix. It's not something that is sustainable over the long term. What has been shown to be much more desirable is investment, stimulating investment, because those are largely, I mean, the investment, private public investment, is largely what will set the tone for sustainable development, sustainable economic growth over time. So once people are able to deploy capital, and those capital go a long way to improving infrastructure and improving a lot of things in the domestic economy, that will provide the basis and platform for growth over the long term. So that should be the narrative that is supported more, rather than just rather than transfers, because transfers, like I said, has those risks that I mentioned earlier.
How do you think that the rising food inflation in the country, food prices have been at their highest so far in over a decade, as food inflation is around 20.5% from about 19.5%. We've also seen headline inflation rising to just some basis point above 16%. How do you think that Nigerians would be able to weather this storm? Nigerians, if you take a look at it, at least in the last few years, I think a lot more Nigerians, many Nigerians are poorer in this administration. The statistics can say that. I'm not the one saying it. A lot of Nigerians are poorer in this administration. So how do you think that Nigerians can weather the storm with rising food prices?
I mean, it's a pretty dicey situation, and the data points are not really encouraging. I know when you look at, I mean, just like you mentioned, food inflation is at the highest levels. Even core inflation is rising, and overall the headline inflation is at 16 points. 47% as at the last as at January. So what you see is those inflation numbers are above the limits, or above that level that is supportive of growth. I think the CBN has hinted at that in prior engagement, that inflation levels above 12% is detrimental to the economy, and right now they are way more than 12%, which is around, I mean, they are 16%. How can Nigerians weather the storm? I think that is best best looked at from a policy environment, from best looked at from a policy environment, because there's little that individuals directly can do. So what you would expect is, how do the authorities ensure that they look at what are the underlying causes of this rise in inflation that we've been seeing? Look at food inflation, for example. A lot of that uptick that we saw in food inflation started from the border closure that was implemented in, I think, August 2019 or thereabouts, where we saw the sustained uptrend, in food inflation, and now it's even worsened by the other, farmer crisis that we are seeing in different producing regions across the country. So you see all these systemic issues. We still have, we've still not been able to arrive at, sustainability in the production of some of the critical food produce that we need, in the domestic environment. You look at a whole host of other things, and you see that, from a policy perspective, um, what they need to be doing is to look at how to address what are the underlying causes of of the rise in inflation and solve it. So
Okay.
there's little individuals can do, but it's from a policy perspective that, those can be addressed.
Okay, David, just a final question for you, and I would appreciate that you answer in just a few seconds. Where do you think is the best
Okay.
opportunity right now to take position on current valuations, especially in the Nigerian stock market, as we've seen stocks taking a beating in the last few weeks, vis-a-vis also the full year earnings release that we're expecting?
Okay, yeah, there are a lot of opportunities that present themselves, particularly when you start to see names, begin to shed some value. So they are bargaining on opportunities in the equities market. So for this, you can look at, you look at them on a case by case basis. You look at the telco space, you look at the banking space, you look at some consumer goods names, and I think even in the industrials as well. So you look largely across, board in those spaces, and I'm sure that you'll be able to find, one or two names that you can invest in. What we always advocate is you invest in fundamentally, sound companies that have, good growth prospects, and also dividend yield. Particularly, dividend yield is, very very important at this point, such that you're able to get protection from any capital appreciation or any capital losses that might eventually happen. So you protect yourself with dividend yields and all. So those
Okay.
are some of the, things that we would advise at this point in time.
Okay, David, before I let you go, we have some questions on our social media handle on Twitter. And let me ask you before I go over to our
Yeah.
respondents. The question is, what does wealth mean to you? Since we're talking capital markets and other markets, there are means by which you can also enrich yourself. So what does wealth mean to you before I go over to our followers on social media and what they say?
Well, I will try to answer this, from without being too philosophical about it. So wealth essentially is, you have you're able to create value essentially. You're able to create sustainable value in terms of, both in from a monetary perspective and also from a non-monetary perspective as well. So if you're looking at it from a monetary perspective, you're able to generate. You have a host of income sources, both passive and active sources. You look at the full picture really. So that is how you're able to create wealth. You have to create value, and it has to be something that is sustainable over a longer period of time.
Thank you, David. I think that sums it up from you. Thank you very much for joining me today.
Thank you very much for having me, Nancy.
All right, let's quickly take comments on social media concerning the question we just asked. What wealth means to you? What would you say? Can I have those right now on the screen? And a lot of our followers are responding right now. Okay. Aquara SN is saying wealth is that thing, intellectual, physical, etc., that consistently generates income to the owner with little or no involvement of the owner. Okay, while Real Amede on Twitter is saying wealth means having all sufficiency in all things. Okay, I think I agree. I will define the wealth of a state as its ability to meet her demands for growth and development. That's talking about states now, like a country such as Nigeria. Authorized by Christ Jesus on Twitter is saying a wealthy person has that ability to buy what he wants without little or no stress. Gentle King, I really don't understand what you said here, what wealth means to you. But you can join us on all our social media platforms. Okay, I was trying to look at if there are other comments that are coming true, what wealth means to you. And just send us a message, Moneyline TV. Tell us what wealth means to you. Okay. That's so much we can take on today's edition of the program. Thank you all for being a part of the show today. Please head over to our YouTube channel, Moneyline with Nancy TV, where you get other shows with great insights on different sectors. Don't forget to be the best you can be and be that change you want to see. I am Nancy Nnaji. Bye for now, and don't forget to wear a mask. Thank you for watching our video. Please hit the subscribe button below. Turn on post notification to follow all our updates.